Good morning, Sphene Universe. This is Coach T, Professor Tommy Halstead, with your recap for Decision 2. Um, Greetings to our red, blue, yellow, and green teams. We will jump right into the standings. And this is the beginning of your Decision 3, which is the peak, one of your most important decisions because you've got all the competitor knowledge, you have all of the customer knowledge, and we'll run through the standings as well as the lost orders over inventory. And I again encourage you to take screenshots both for your final presentations and for this week's coming week's meetings. So let's jump into the standings to start with. Now I encourage you, as I also have, to pause the video, take screenshots of things that you might want to watch for the whole rest of the video, but also in your analysis in your team meetings. And then you can use these visuals again, and you can do that in the future too. Take screenshots of this and then use them in your final presentation to show the progress you made, where you might have done different things. Again, another way to do this too right now is to take a screenshot, pause the video, and then especially of things like the standings and then your EBIT. And so you can, as you look at lost overall inventory, we can superimpose kind of the standings on that. I'll add these, if it edits, there'll be some jump cuts, so you can see that on the screen also after this is done. But it's also great to look at that, which is I do at the same time, to see what are the effects, the cross effects of the decisions. Now you can see, first of all, it looks dramatic because they use a log scale here, so they can get separation. And of course, the weighting of our indicators are always higher if you're neck and neck between two and everybody's got the same score, like they're number one in something, they also weight downward logarithmically. The give a little more weight to the financial indicators. So, and of course, they're all related because the gears all turn together. But you'll see then revenue, ROCE, return on capital employed, and shares to a lesser extent, but certainly accumulated retained earnings, which no one ever hardly gets positive. And we'll see that in the financial results. They're more weighted. So it looks dramatic, but everyone except for green is tied neck and neck. These are all 1 point apart. And you can see by just looking at the scales of who's number one, two, three. Now, obviously, if there's 6 indicators, 14 24 is the worst you can do because you'd be all four. You'd be number four in all the things, so you'd be 24 down here. The best you could do with 4 teams and well, if you had four times six is 24. If you had 1 times 6, you'd have you literally get a six. So you could almost get ones and everything else except two and something else and end up with 9 because of the weightings. But also you can see as green team is doing fantastic. They continue to be head and shoulders, even though these look even above all 3 teams. And yet, on the other hand, all the other 3 teams are neck and neck, very close to each other for the number 2 spot, which 16, 17, and 18, because they've distributed these things and done well. A good example is like, wow, yellow has this downward trend. What happened to yellow? Well, yellow's also doing great. You look at revenue. Yellow's number 2 in revenue. So they're not, and they hit number 4 in other indicators because it's not profitable revenue. And you'll see that with lost over inventory. You're investing a lot of market. And one of the things is that if you want a high revenue, you have to match supply and demand so you're not losing all those orders. But you also, if you have a lower your price strategy, you're giving your profit back to your customers by lowering your price. So you got to watch the prices too. And you can kill it with revenue, but to be number one, as green has consistently in both revenue and of course, when we look at it, you can look at this from what I posted on Halo already. You can see that the green absolutely killed it in image, and you're going to have some emissions problems. And lo and behold, what are we? Number 4 in emissions. So, and you look at red team, who's been doing consistently fantastic also, and and even though it looks like red was jumped from last below up to second place. One of those reasons is they hit some more number ones, but also their strategy wasn't as heavy in Image, although they came in number two in image, they did really well. They also had were positive in in low cost and they came in second in eco. So that really helped Red's position here because eco does tie to CO2 emissions, but then we can't win this in with just emissions. Now these are all connected. Like for instance, you look at revenue. And who's, number one? Okay, we know green, but what about yellow? Yellow is number two in revenue. So how is their employee morale doing? Number two. There you go. So morale is very tied to revenue in this sim. So you can invest in morale and HR and quality, which you should, but the the big winners, if you get profitable revenue, then you'll automatically get that. You won't automatically get emissions, but you will automatically get morale because everyone's going to leave work and go socialize and say, wow, we love working for this company. I'm going to recommend this car to my relatives and all that stuff because they're proud to be with a number one leader, and especially in quality. Now, remember also, there's on the sliders, we'll look at that again, but there's things in the sliders that really drive costs. And you have to be careful to use those in the right lines. So if you say, I'm all for eco save the world. I'm going to make consumption number 10 across all lines. You're going to be so in over engineering something like image who doesn't care about consumption. So literally it's applying those on the white lines that's very important that drives it as well as how you price and then your portfolio strategy. So you can easily start to see the portfolio strategy here as you look at the rankings. And let's move to the quickly to the EBIT and the faculty report. Okay, this is our primary comparison that we want to do every sim with lost overs over inventory as well as the financials, of course, in every line. These, I'm just going to go quickly through these so we can straight to take screenshots. You're becoming more and more sophisticated at this, but just with a glance, you can see, even though everyone is neck and neck, you can see what is the portfolio, who's doing well in what. And green has consistently broken into, if we look at, especially if we look at the seminal lines, the ones that are really important, that drive a lot of growth and revenue, which are our two portfolio leaders through most of the sim, depending on how the teams invest, but are in family and image. And you look at just starting with family and image, and is there anyone that's got a good pair there? Well, blue has got a pretty good pair. They've got some doing great there. Red does great. Red has a problem, and we can look at what it is. In family, they should be doing good there too, and but they did great in image. Yellow, you can say, wow, yellow's catching up. They're below the E positive even line in everything. What's going on here? Well, there's a eco kills everybody, as you can see. Green does a lot better in eco, but eco kills people because it's so heavy when you start to push the consumption. Things like, we'll look in the white lines more about what drives that and why it hurts your capex, but also lost over inventory. If you're marketing like crazy, but you can't make it, then you're going to be losing all those orders. And also, if you have innovation, if you have things that are a lot of numbers of models, performance, things that are high in capex, you also have a higher field failure rate, which slows down production in your plant. So there's a subtle side of not just picking plant capacity, but being careful with how you invest in performance innovation and the things that are heavy in initial learning curve and failure rate. Now, there's learning curves that I could show you here, but it gets really into a rabbit hole. You just have to remember that there's a learning curve whenever you make something more novel. When you hit novelty, you're going to have more failures to start with. And yet, image loves novelty, they love performance. So that's how you can actually, something that's basically a gimme, how can you kill yourself? Like yellow is almost positive, but still didn't break into this positive territory. It's because you have to be careful of quality and field failure as well as matching what you have. If you sell a lot and you've marketed, but you can't make it, then you're not hitting the production numbers. And there's a lot of places where we show that slide of adding back depreciation and then finding your unit capex, multiplying it to the change in demand, and boom, there's your formula of what you have to invest in your plant capacity. That some teams haven't gotten. Shout out to Blue Team, who has continually done fantastically with some difficulties in terms of team unity and getting team together and all that. To see the position they're in and what they have done on these numbers is absolutely extraordinary. Not every team is radically um, functional, clicking as well as Green has been. And if you're handicapped and you got five people and two are the major contributors, not only are some of the people not going to get through this class and make it through the class, but you're giving more than you should be giving. It should be a team effort. So they're having some difficulties getting some of the teams together. And I join the team sometimes. I jump in. I'm working with you, and I can see what's going on. Sometimes I'm there quietly, and part of that is I've seen some people. I won't call out people. Obviously, we're not shaming anyone. Everyone has their own lives and reasons, but there are people who join a team at the end, possibly on a cell phone, having done no research, having a car line, and maybe when I look at the profile of that student, they aced the midterms. They're really good at business and they really understand, or maybe they're really even good at finance. And I seeded the team with them as a finance person. But if you're really good at that and you're not doing your homework and you just jump in and to cite, hey, I was there for a second, it's not going to work because you got 190 points coming in peer reviews. And if EIs have been sent out, I've sent warnings because on top of that, you're not doing the assignments. You're not going to get by this class, and you may be in a, you may have taken it early, and it may not matter. You can take it over. You may be actually the capstone class graduating, and it could slow down your graduation. So please, this is the end time where you can jump back into your team and do the work, watch the videos, understand what's going on, and contribute to your line. If you are and I'm talking, there's a few people here in every class. There are, you have 20, 30 students, there's always two or three that either for don't understand the course, that it's so important to do that work, or have severe issues, tough times, like we all do, with very, very busy schedules and can't join the team. But please, please, if we're getting past the drop ad course, I always beg people to drop if it looks like they're not going to make it, because I absolutely hate failing, especially people that have the ability to do it, but that don't jump in. So, and I am here to tell you there's a lot of sacrifices being made by people that are just as busy as all the rest of us, and yet they're making the teamwork. So keep it up and keep the texting going. Do the best you can to get together as teams. And if you can, record it and let the other person watch it. But if it turns out that you're having to kick two car lines because someone that had one does nothing on it, that's just not fair. This is an ethical school, and we should maintain our ethics. So that's just kind of not much of a pep talk, but hopefully that you'll keep that up. Now let's look quickly at the numbers. You can see where issues are on the percents we also look at in terms of where are we doing good on a line in terms of our totals, and where are we having the red bands here. And you can take a screenshot and look at that and say, what are we spending on HR and quality? Usually, 150 is a great amount. 200 can at times be a little bit too much. So you can see there's an indicator there, but you can also see what are our indices, and the indices are close here. If you're investing in H&R quality and you're doing better in it, like if I look back, what is yellow is probably doing better in that. Let's look at these results. Sure. Quality. H&R quality. Bear with me. This is really tiny type. Yes, obviously, there's a good correlation there with yellow. And, again, let's not look at this bar and say, oh my gosh, we're so much better. That is true in the case of, let's be honest, in the case of green, they're really nailing it. But everybody else is really close. We have our ups and downs, and everyone's always gets killed. So it's how can you be less killed in that? And you look at ARE, and nobody usually in any um, sim ever gets past where they need to be into positive territory with ARE. So let me see if we have any government loans here. Let's look at cash flow. Yeah, see, we're still very negative in retained earnings because we're not, getting past our nut of what we're borrowing and what we're bringing in just because of EBIT. So let me see the government loans here. Previous cash, current cash, additional loan. 12, 12, 12, 12. Okay. This additional loan, if you say, wow, how come you keep saying everybody's doing really good? Many, many sims, this has got 9,000, 18,000, 9,000. where government loans, no one watches their cash flow. Every one of these teams, and that's why they're all neck and neck. We're all neck and neck. We're second. We're basically three of us are in second, and that's because we've done really well with the free cash flows and are as haven't validated with too much negative towards the negative end of the cash. So cash is king and queen in business. You have to really watch that cash flow, and that's tied very directly. And this is recent knowledge over the last 10, 15 years. People have realized how important CapEx is to cash flow. So, all right, let's jump into our individual lines. Okay, let's see how everyone is doing and where the best improvement is in each line. Now we can look at low cost where green and green and yellow are still having some issues breaking through that EBIT line. So is there anything in lost orders where green and yellow have anything in common? Aha, here's our zero line. Both green and yellow, as we look at the bars, and we need to go back and forth with these, but the bars on the results in EBIT, you can see clearly that two teams, although they're building inventory, are are and the trend on both of them, trends on both of these are good towards the zero line, but the zero line is like way up here. So you can see red and blue are doing great in low cost and trying to matching their orders to their sales. And this is lost orders down here, and this is inventory. So we're building little inventory. We're having lost orders here. Now, green has gotten to the point where they had a problem and they're going in the right direction. So they have increased their capacity and their production, and yellow did greatly because look how much closer they came. So everybody did really good trend wise here. And our two teams that have broke into positive territory, if they were down here, in other words, if you had drew back your inventory, not by lowering your price and selling off and getting rid of your EBIT but by engineering correctly and backing off of those sliders. We'll tie this to the sliders. Then you'll get back to the EBIT too. That's all three of those connect together. That's low cost. Let's look. And by the way, I'm going to give shots at the end of all the financials for all of these. I just don't want to spend that much time talking through them because you can take those shots and see what's happening. This is really gives you the essence of what you need. This and the white lines, the white indicators of the different, let's see, family. All right, looking at comparing to the EBIT, you can see that what are our two? Do we have blue and green? Where do we have blue and green? You can see the two in positive in family. If you look at EBIT, are blue and green. So now let's look back at this. Look at our zero line here. Look what's going on with blue and green. Right there. They have blue and green have matched supply and demand in one of the most important cash kind of driving lines here. So this is family, and this shows how important our EBIT is to matching our supply and our demand. And we look like we have two kind of opposite problems in family. And the worst lost orders is the worst, but inventory is also bad. So how would that reflect in EBIT? Let's look at the bar chart. Yes, red. All right, red and yellow. We have different problems here. Red is building a lot of inventory, but they're going in the right direction. They've flattened out. Yellow continues to have lost orders, which means in family, a very expensive line, they're not producing. They're getting a lot of revenue, which we can see in the financials, doing really well, but then it's not they're not able to fulfill those orders. So it's not a matter of just pricing where you're losing your EBIT because you're giving your windfall back to your customers in a lower price to get more revenues. It's also unprofitable revenue when your costs are too high for your revenue because you're investing in cars and getting orders you can't fulfill because of production. So that production formula, Yellow Team really has to look at in family, and that can really turn it around for Yellow. And by the way, Yellow can easily win this entire sim because when you get to decision 5, there's a trick. This is 3 and 4. The final decision, couple weeks. There's a very I don't want you thinking about now, but there's something that happens with inventory that we'll explain and show a video later that you don't have to worry about now. But you can obviously see that you won't have a sixth period in the fifth decision, so you don't have to worry too much about production for the next time either. But there's something that happens with inventory where the last team can quickly become first, and the first team's got to be very careful in what they do with inventory. But we won't overthink that now. So let's jump into the slaughterhouse we all assigned every time, which is eco, and we each now looks like green is not doing so bad in eco. Let me see what was there. Okay, yeah. So green, you can see green is pretty much trending and not doing too bad on that zero line. So it's not lost overs inventory that's a problem, and they're almost near. It's really hard to get there in eco though. But blue, you can see, is building a lot of inventory there, which means they're kind of they're making it, but they're not investing in marketing because they backed off from it. You just have to make less if you're shutting eco down or not trying to work. If you're trying to turn it into in decisions 3 and 4, more 4 and 5, eco and low cost come into their own because they're growers. But because of the investment in the success in image, it's going to keep on going unless the gas index goes to $4, which it doesn't usually do in this sim. So then again, eco, it's we would rank what are the rankings? The biggest lost orders problems are yellow, and yes, yellow is last in eco. Then we have red is not doing too bad. They have some lost orders. Oh, look at the zero line here. Red is not too far from the zero line. So if you look at red and green, they should be the best in EBIT. Yes, that's right. I'm not seeing what you see on the screen because I put this on later, so I got to look back to see how the effect it is. I'm just predicting what it'll be, but I want to confirm. So let's look at our flagship line that everybody did great in. Yellow is right on the verge. So yeah, it looks just about according to Eco, looking at the bars that or an image that yellow were almost not quite positive, but almost there. And so that they drew down their inventory, and this might be by lowering price. We haven't looked at prices yet, but we can see that red and green, blue did great too. Oh yeah, okay. All three of these, the trends are great. Green, blue, and red. Red especially is doing great. Green has just really drawn the inventory down without lowering price. They've really engineered, done great jobs on the capex, and emulate the best. Always kind of go after the number one. I don't mean go after them, kill them, but just go after them and see what they're doing and emulate what they're doing, or do the opposite. Say, I'm not going to make. I'm going to make a big play in family. They're dominating image. They have a flywheel going, and at the marginal, remember the whole idea of operating margin. It's fixed cost over variable, it's revenue over EBIT, but it's also contribution margin as a numerator. So every unit more that you have to spread over your engineering base, it becomes a lower cost overall. So your production, you get a learning curve. If you got it's all market share in this portfolio. When you get a lot of market share, you build a flywheel. You've got your fixed cost covered. You don't have too much leverage, which none of us do. Then you're going to create a flywheel of operating leverage where at the margin, every marginal unit you have brings a lot of money over break even. And part of the reason for that is that you have a wider installed base of cars out there with service and everything else or any other product or software or whatever, which with which to spread over your R&D costs. And engineering here is R&D. So as you design what you're doing, if you have a lot of fixed costs there and you have a lot of costs in engineering, you're never going to break out. You're going to be below. And then you have a lot more losses on the downside just because of that degree of operating leverage. This is not a big financial leverage sim. It could be if you were messing up with your cash, and you'll see that in all the businesses you run and are a part of. But it's everyone's done good here, and even when you have leverage, it goes up. Your cost of funds do go up. It might be 2%, 5%, 8%, but they're never onerous. Even if you got 60% leverage, financial leverage, that debt is not going to kill you in this sim because you'll get a government loan and you'll have some help with cash. But so it's engineered to be more about operating leverage so you can see how important it is to engineer correctly. But let's jump into the individual lines. Then we'll do the financials at the end, and I'll be waiting for questions in the text and in Halo. Okay, we're going to start. We're going to kind of go backwards. The sim wants us to go red, blue, yellow, green because that's just the way it organizes things and it runs itself. But we're going to kind of go backwards and look at look at green, then yellow, and then blue and red. So going backwards to kind of see what happened with our leader, what happened with all the three of us that are in second place in our portfolio, and what do we pick? Um, Again, you're going to see that on the emissions side that it's like we weren't trying to rank number one in emissions because we were big in image here, but the gas index has gone from 112 to 2, so it's not going to kill us in image yet. We don't want to see $3 there or four like in real life now, but let alone five. So let's look at some white lines here. Let's get into now. Remember, in your dashboard under markets and all the rest of that stuff and the indicators, you can look at your competitors. I try to give you more about your competitors here, but you can look under the marketing sections on your own interface and see that. Let's jump into our business lines. Let's look at low costs. Snapshot. What's going on in low cost? This will change. This isn't giving too much away, but they know they know what they're doing. Look at the matches of these lines, and they figured out what should low cost look like, what should marketing look like. This is like giving away the keys to the kingdom, but also it's not that simple. You can't just do one thing if you don't handle the financials. Also, let's look at the budget. And we can see, let's look especially at price. No percent in price, 40/40. And we'll look at that again in terms of our value chain, and our market share and our current forecast. Field failure rate is important. I won't say too much about that. Let's look at family and let's look at engineering. Again, family is, I think Green Team did good in family, but there are some things here you have to watch in terms of design. I see what they're doing here. There's a great strategy here in terms of the killers are the best in terms of what does family want. And obviously, size is important to family. So that's something we want to take a look at. It looks like they're just keeping a flat here, which is flat there, and it's grown a little in what's needed there, but it's a small gap all along. The only one that's little number of models can absolutely kill you. The reason number of models can kill you is because it's really expensive in CapEx, and that would have, and Green did great still in family, but this is something you may want to look at, this gap here in terms of models, because that's one of the major things that can drive your CapEx. All right, let's look at eco-friendly, where everybody get killed, and yet green did really well. There's nothing. What's happening? Oh, we saw lost overs inventory there, which is not too bad. Yeah, we're not doing much in in terms of our decisions in marketing. We've kept that flat, which is smart. So this is not a bad match at all. Obviously, we want to look at where are we over, where are we under, and it's so tight and so close. Keep on keeping on. You're doing great, but you may want to say a little less here, a little more there. Just in the gaps, and that's not as important as the matching production, which green is doing. That right near that, and blue as well. But let's look at, okay, this is here we have our flagship. We can see, we know exactly what's going on there. We're investing a lot. I mean, you're investing a lot here. You've built the flywheel. You can get away with this. This isn't, everyone can't get away with this. Some will need to invest less. But when you get to things like robustness, technology increases your field failure rate. Um, let's see number of models here. What are we at with number of models and how did that work? Yeah, a little bit of overinvestment in number of models. It's not killing them. They can do a little bit better by being careful of that because it drives CapEx a lot. We won't worry about marketing. And then go to budget. Okay, now we are looking at low cost. And here is a major, major issue in low cost, which is a low cost, robust. Is this performance? It can't be robustness. Oh yeah, robustness is fine, but performance is our issue here. The This is really a high number in performance for a line in low cost that doesn't care a lot about that. So there's a huge amount of overinvestment here, and recouping that with production is important. So it wouldn't take a lot for yellow to correct. what they're doing with just this one indicator in this one line. Now, you might have someone who's a low-cost car line person who hasn't really studied this. I don't know about any of these teams. I don't do individuals. We're not shaming anybody, but it's also a group decision. If someone comes and says, I'm going to really invest like crazy in this, and even one member has watched the videos or studied the cheat sheets and said, wait a minute, low cost doesn't care about that. And do they care about dealership proximity? They're not doing too bad. There's a lot of overinvestment there too. So you just have to be careful, but because cost cares about cost. Let's look at family. Yellow should have done much better at family. Yeah, oh, yeah, this is not the problem. Yellow did really good with matching this. And a tiny amount of inconsequential, except for consumption in terms of consumption is more important in eco than it is in family, but they do care about it. So this is pretty close, really. Backing that down is not going to do. It's really the production that's been the problem with this line in terms of loss over inventory. This is contributed to it, but it's more a plant capacity and what are you choosing to make that's important there. Everybody gets killed here. Again, good matching here. I'm not doing a lot of radical changes in both. So the once you have this down, usually you have this down by the third and fourth decision, then you really have to focus on lost orders over inventory. Let's look at yellow's doing great. Look at this. Yellow is nothing to sneeze at in terms of doing this stuff. There's not there. You can see where there's more overinvestment than underinvestment. So if you have to, it's better to underinvest than overinvest and lose orders you're not producing. If you want to overinvest and it's not in everything they want, make sure you can still make it if and without having to lower price to get that revenue. Are we into low cost yet? Blue kind of broke. Blue did okay low cost, but they could have done. Blue is our leader in low cost, which is really interesting. They're really getting us down, but the up and downs of it, you can see the what does low cost care about? We know what should be three and what should be one. Number of models, the novelty, where's novelty, which is expensive. All these are doing great, and where there's under investment here, it doesn't, it's not a terrible thing because you're matching supply and demand here and you're above break even. There's some little tweaks you can do here if you want to invest more. But again, if you're backing off of low cost as your flagship and you're putting your time into family and image, and Blue did great even in eco. So this is a really good balanced portfolio with Blue. They're trying to be everything, and you can do that. Doing a great job of it. Let's look at eco. Fantastic. Blue's got it in terms of the specs, and it shows. I mean, Blue is doing really good in the sim, and despite having some issues in terms of getting the team together. Congratulations, fantastic work here. Last but certainly not least, we have got our red team, and there's one big issue going on here where there's a huge amount of what is this low cost? Robustness is very, very, very. I mean, there was a red made an investment and did well. They were number one, number two with blue team in as I'm trying to do my memory here in EBIT, and yet robustness is very expensive in terms of no, it's quality. It's our quality, and it's no line doesn't care about quality, but spending a lot on quality at this level, and what is this like a 7 or 8? Let me see. Yeah, that's a 7. So that's quite a bit on robustness. Everything else is matched perfectly. So that's just one thing you may want to look at. Although again, red is doing great. Let's look at family where I think I remember, yeah, family, my counsel to red would be especially on family here. Now the match isn't too bad, but we remember it was lots over indicatory again. Let me see, marketing, not too bad, not big of a gap. So this is outstanding. I mean, where's number of models here? Okay, yeah, there's a little bit. That's great. That's not bad. That's something you have to be careful of number of models in family, but it's also can do well. So be again in family, there's a good play here. You're engineering well, you're spending money, and it's a matter of the production thing. You just got to keep an eye on for on your family line. Eco, everybody got killed, but Red did a lot better than others and being killed less. And there's zero issue in terms of what Eco wants here. It's you're staying flat, not over investing in it, and you know technology is important. The models are also important. Where number of models, that's perfect. That's stayed where you started. And consumption, again, is important, really important to eco. So there's no under or over investing there. So and you basically nailed eco. It's again the production there. If you're going to do that investment, produce enough, or if you're building inventory, you have to back it down, but not with price. Maybe a small price change, but not a big. We don't care about that much about dealerships, but they do care about. Oh, that's really interesting. That could back off a little bit on those. These can back up a little bit, not a lot. Oh, of course, red did really good in family. Okay. All right, I mean an image. All right, let's take a look at some financials and some budgets. All right, now let's do some quick snapshots and then we'll get this ended. We'll look at low cost right now. Take a screenshot of that. You can see we know what happened in low cost. We know that yellow had a bit of an issue. We can look at yellow here. We can look at what happened in price. Nobody's going crazy in price, but blue made a play here, and it paid off because they made what they needed to make, and they did lower the price a little bit. And green, hit did well. They didn't. I mean, there's some EBIT issues. Let me see EBIT here. I'm not looking at that, but you can see it. You'll be able to see it here. Yeah, green and EBIT here with green, you know what you need to do there by taking a look at these percents. So, especially marketing, where this is way, way too high in marketing spend without making it, but you're going to get a lot of revenue. Good job, yellow. However, you got to make it if you're going to go that high of a percent. Remember, we want to get around 100% here. And green even had a bit of an issue here in terms of over marketing for low cost and what they really want. Take a screenshot. There's a lot of information here. Look at the red and blue bars, where you're doing well, where you're having issues. Not going to spend a lot of time getting preachy. Let's look at family. And looking back at EBIT on family and looking at low cost, lost orders over inventory, Green did fantastic in family, what they should have been doing. They made a big investment in it. All right, yeah, their Green was able to make enough to lower the price without destroying their EBIT. And that's what happens when you build a flywheel. That's exactly what a flywheel is. You can stay somewhat positive in EBIT, which we did, and fantastic. Yeah, this is a really good profile to emulate when it comes to if you're having issues in family. And of course, everybody did good in image, but yellow should look at image when we get to it and see what are the differences in this shot of what you're doing and where you're investing and etc. Eco, everybody gets killed. So let's see if there's any over engineering here. A little bit of over engineering, especially well, oh, blue. That's interesting. Yeah, this is interesting because blue knows well enough not to overinvest. They're kind of defeaturing the line, but you have to draw your inventory down if you're doing that. And let's see what happened with price here. Yeah, blue has a very interesting strategy here with engineering versus price. That's something blue you need to look at. But not overly hard. You're doing great. And let's see, how did everybody got killed in inventory? Green didn't do too bad. In eco, let's look down at EBIT. Yeah, they've got everybody bleeds a lot. They're just bleeding less. And let's look at inventory. Where's the inventory should be a problem with this 63 and 88 for blue or yellow. Let me look. Oh, there we go. Okay, there's our build of inventory right there. With blue, that's again blue. There's a real lesson here for you. In eco. and certainly yellow also. Uh, Clamp capacity. All right, clamp capacity is not too bad there. All right, so now let's look at our flagship line image, not for eco purposes, but not for pollution purposes, but for profitable sales. And especially let's look at green. Engineering appeal. Is it near 100%? Yeah. All these, none of these are 300, 200%. They're all hitting right on what you want. It's very rare that people try to raise or lower the price. Blue is saying, I can have a little more. I may not get the profit, but I can do well in revenue here because I know that's a real driver here. So blue and green are really, look, they should be neck and neck, and red's not doing bad in image either. Everybody's doing really good. And yellow is just, what's yellow's issue? Yellow's the only one that didn't absolutely nail it in image. So let's look at inventory. Let's look at our unit costs. All right, unit cost is a little high here. Capacity is a little low. Huh. Let's look at, everybody should be kind of okay in inventory because that line wasn't high. Okay, yellow has not a big problem in inventory. Um, yeah, so yellow's the only in our primary line. There, yellow didn't quite cross over into positive territory, but it's not terrible either. But look at this, $981 million, or whatever you want to call it, on Green's part and image, just an awesome. So again, and you'd like the best, take a look at this. We looked at the financials. We looked at where the prices are at, and that should be a wrap. I have my, instead of my Rosé hat on this time, I got my Tommy Bays hat on, which is how do you predict the future in uncertain conditions? If you have incomplete information, subjectivity, Bayes' theorem is the way to do predictions. That's, if any of you that move on to your MBA will see that Bayesian inference is key to artificial intelligence and how we're doing forecasting. I had a book here I was going to show you. I'm not sure where it is, called Super Forecasting. And it really gets into how you can look at your demand compared to your supply and what we're calling lost over inventory. Thank you again for your time. I really appreciate it. It's a weekend, and especially thank you for validating. So everyone validated by Thursday. The meetings were intense and a lot of meetings. So everybody's doing great. Thank you. Fantastic. After thousands of universes and many, many sims for decades, I can say that it's amazing to be so close. Everybody's really doing great work in the sim, and it's paying off. If you're among the few students left that aren't joining your team, we're at the go no go stage in terms of jump back into your teams, because next period, I believe next period we have our first peer review, and then we have another one, decision 5 units, not unit, topic 7. I'm used to camps and some of my other schools. So jump in and do it. Work with me if you need help. And the teams are great. Your teams are great. You're really willing to accommodate and help people, but I have to protect my validators and not make sure that everything is thrown on them because someone doesn't have a line and suddenly they're making decisions for 2 or 3 lines. So jump back in and engage. It takes work, offline work, to really study to join your group. You can't go just wing it. You can't just say, I didn't look at it, didn't study it, I don't know, and I'm not sure what's going on, but maybe we should make this change in price or something. It becomes clear to your whole team that you don't know your line, and clear to me too. So thanks again for a great sim, and take screenshots. You're getting towards the home stretch here, and all these graphics will help you in your final presentation. It'll be a breeze, and there's a huge, this is really, no one has to fail this class. It's hugely and loaded, the points in this course, for a reason, and you can work together on your papers. But if you're not contributing to your team and they decide to work together on a paper, for you to turn in that paper then is not real honorable. Thank you. I really appreciate it. Jump in and join. And thank you so much for you that are doing great to bring together your teams and all those texts. I got like 180 texts yesterday, the day before. because everybody's really engaging and working to get together with mostly very busy working adults, parents, military service, and all that going on at the same time. God bless you all.